right, so in this video, we're going to be talking about inverse fair value gaps. So I'm going to use this GBP USD from Friday, and we're going to talk about it. Okay, so let's lay the framework for this, kind of what I was originally looking for on Friday on GBP USD. So as I was talking about on Friday for GBP USD, guys, we had this thing pushing up, right? It was in a deep premium. We had this surge up, and it was taking out significant higher time frame buy side. It was also taking out Asian session highs, and this thing was just pushing up, right? And then we saw this little pullback, and what I was looking for here on GBP USD is I was looking for, as always, my shift in market structure. I wanted to see this attack this opposing sell side down here, because we have low of day sell side liquidity down here. We have these equal lows down here. But as I was telling my mentees on Friday, whenever we came down and we attacked this low right here, I no longer liked it for a short, because it's taking out sell side. It took out that draw. That was the draw that we had. It was that magnet for price, but now that magnet is gone. Okay. And what we saw next, or now I want you to look up. What do you see right there? You see a fair value gap right here. See this? So, and for those of you that don't know what a fair value gap is, I'm going to leave a link in the video description to the video that I made on fair value gaps. Okay, that'll be in the video. So if you don't know what a fair value gap is, then I do recommend watching that one first and then watching this one. But here we go. So 1, 2, 3. 3 candles. 3 candles make the fair value gap. 1, 2, 3. Bottom of the first, top of the third, don't touch, leaves an imbalance. Boom. There's your fair value gap right there. And we just saw that this thing came down and took out liquidity right here, right? And I'm talking about all this stuff over here, like the liquidity and, you know, all this stuff you see, because it frames this idea. It's not just going in and looking for some random imbalance, right? This actually frames this idea, and so yeah, we come down, we take out the liquidity, and it's gone. We no longer have that draw there anymore. It's taken it. It's taken that draw. And the 15-minute to 1 hour market structure on GBP USD right here at this moment is bullish. It's a bullish trend. And now you're taking out liquidity within that bullish trend. And we had this big move lower right here. What do you think that's going to do when you have a big move lower like that? When you see like this big explosive move like this and it's taking out these lows, breakout buyers, shorts are all over this thing looking for lower prices, right? So what's that going to do? Where are they going to keep their stop at? It's going to create buy side liquidity above resistance up here. Okay. And yes, I was looking for a short as well, but the second that it came down and took out this low, I was no longer interested, because I no longer have that draw there, and it's bullish market structure. So I needed to see that left intact. If it came down and gave the shift and pulled back into a premium and then attacked us, that's solid. But the fact that it took it out first here, I don't trust it anymore, because you have to have a firm understanding of liquidity here. And what I also understand is, okay, this was a big move lower. That's going to entice shorts to get in. It's going to create buy side liquidity above this high right here, because that's a level of resistance. Where are they going to keep their stops at? Above resistance. Where else are they going to keep their stops at? Resistance is that area where those stops are going to be residing. And now we have this big imbalance right here. And look what happens next after we take this liquidity. It takes that liquidity. It ramps up. It comes up to the imbalance. And boom. It breaks above that imbalance. Look right here. Remember, this is our bearish imbalance. Look how it closed above it. That's not a good sign. When you see something like this, and also another thing, like there's no other imbalance up here either. I want you to notice on the 5-minute chart, there's no other imbalance. There's no reason for price to move higher. If there was like another imbalance up here, like if there was another imbalance up here that it needs to efficiently deliver, that it needs to rebalance, then that's a different story. But the fact that there's no other imbalance up here, and this is the only one right here, and we've already taken liquidity, it's a bullish trend, and now I see this thing come up, and I see it close above this imbalance with a strong close. That's not a good sign. There's no reason for price to do that. If it's really respecting this level, there's no reason, or if it's respecting it, it's going to close inside of it. It's not going to close on the outside like this. That tells me that it did not respect it. It did not respect that imbalance. If it did, it would have closed inside of it, and then it would have had the continuation. But the fact that, and again, it's kind of a combination of things here that frames this, like the fact that it's overall bullish trend, right? The fact that we've already taken out significant sell side down here, being the low day level. The fact that now It has that big push up. It has a strong close. There's no other imbalance up here. All of this stuff adds up. And then we can come to the conclusion that, okay, well, we had that big move lower, and we understand that that created buy side above this level that enticed shorts to get in. And now we have this inverse fair value gap, because the inverse fair value gap, you're going to see it close above the fair value gap. It's not going to respect it. It's going to close above that level of where this, because you see like the very bottom of this candle to the actual top of that third candle, you have this imbalance in there. Like you have that area in there that like it did not touch. There's nothing but body in there. And that area, you want to see price close above it. Close above it. Like the actual close of this candle is above that right there, as you can see. That's an inverse fair value gap. Now, then it comes down, the next question is, okay, well, how do you play it then? How do you play the inverse fair value gap? Well, what you'll find with inverse fair value gaps is I'm sure a lot of us understand like basic support resistance theory, right? Resistance, and I know a lot of people in the SMC community, they don't really subscribe to that stuff, but you'll see like with these fair value gaps, a similar deal play out. Resistance when broken becomes support going forward. That's what you'll see with these fair value gaps. When you have an imbalance like this that's broken, what you'll find a lot of times, within the proper context, of course, is it'll come down, excuse me, it'll come down and it'll reclaim it as support if it still has to draw up above as well. I mean, of course, if it still has to draw, it still has that magnet for price, which we've already understand now at this point. Since it's taking out this sell side down here, that's gone. It's going to be this up here, obviously. That's going to be your next draw. So as long as we got that draw up above, and then it gives you a pullback, you could look for it to come down and to reclaim this area as support. So you can see this is exactly what happened. Looks, it gets a big push up. It's completely cleared that level. And remember, guys, there's no other imbalance up here on this 5-minute chart. It's already rebalanced it. There's no reason for it to do this. There's no reason for it. It already took out the sell side. It disrespected this imbalance. It completely cleared it. So again, kind of think about resistance when broken becomes support going forward. It's cracked that level of what's now support, right? There's your opportunity to get in. Just on that pullback, you can literally treat it like just old levels of support. Like, you know, when you get like, for example, an old high broken, right? Again, it goes back to basic support resistance theory. You get like a level of resistance. Price smashes that resistance, and then it returns to that level later, reclaims its support. You get your next leg up higher. Imbalances are the same way. You can treat it the same exact way. So, yep, what you're going to look for, you know, you want to see it come down. You want to see it come down into that inverse fair value gap. See this? Look right here. Look how it comes down and it tests that. Now you're going to anticipate that it's going to respect that as support, and it's going to seek the opposing buy side. It does it just like that. Perfection. All right, so now I want to use this EURUSD for example in this higher time frame chart. So here's the thing. I kind of touched upon this in the previous example, but an argument that some people will have is, okay, Mike, but yeah, you used that GPU, but I see like several other examples where this just did not play out at all, right? Like for example, let's see. Like for example, we have right here, for example, look at my cursor. We have like this bullish imbalance right here, right? Look where I'm about to plot it on here. See that? 1, 2, 3 makes a bullish imbalance, right? And then somebody may have the argument that, okay, well, I see that price came down right here and it violated that imbalance. Is that an inverse fair value gap? We had this imbalance and then price comes down and it cracks it. So then their argument would be, okay, well, but then look what happened. So yeah, we came down, we sold off for a little bit, but then it ramped up and it just completely violated and took out the high. So what happened there? Like, why did it not respect that level right there? Why did this inverse fair value gap, just like that GBP/USD, why did it not come up into this level right here, reclaim this resistance and then sell off again? Like, what's the deal with that? It goes back to what I was saying in the previous example. You have to have a firm understanding of liquidity. You can't just fucking go in and look for any inverse fair value gap and then look for it, you know, reclaim its resistance, sell off. It ain't that easy, guys, right? There's a little bit more to it than that. Okay, and then it goes back to having an understanding of liquidity. Because guess what? The reason it ramped up like this is because it only took out higher time frame sell side liquidity. Look, right here. See that? We got a swing low right there. See how I took that out? And look right here as well. You not just one, but two higher time frame levels of liquidity that you're taking out right here. Yeah, guys, so no surprise it didn't hold up. I mean, it's already completed its objective of taking that liquidity. It has no reason to find resistance right here. It's going to see its opposing buy side now. That's exactly what happened. See what I mean? Like, you got to have that pull for price still. Like with GBP/USD, we did. All right, if you just rewind the video, you'll see what I'm talking about. We had that high day draw in GBP/USD a moment ago. Remember, we still had that there. We had the inverse fair value gap, and then we get the pullback while still having the draw still there. But the fact that this thing wasn't respected is because we already took out these draws down here. Okay, now you could still look for it to come up into this area and see if it provides a reaction. That's what I do a lot of times, because sometimes price still will roll over. But would I go short on the first push up into that level when it returns to it? Not at all, because again, we have already taken out higher time frame sell side liquidity, so it has no reason to move lower. It's going to want to seek the opposing buy side now because it no longer has that magnet. It no longer has that draw for price, right? So we come up, boom, we take out these highs, and that's what happens because that's the next key liquidity pool. So the thing here is you got to have that you got to know where you are in regards to where that next draw liquidity is going to be. Now here is another example, right? Because we got this big move lower the other day on Friday from news, and you can see at this point it is look right here, and we got this. I know we got a little imbalance right here, and that's actually an inverse fair value gap as well at this point. So look, we actually got a couple bullish imbalances in here. You see this right here? Look, we got a big bullish imbalance right there that was created on that big push up to take out this high, and you actually got a little bullish imbalance right here as well. See that? And of course, in the process of doing this, you created this big bearish imbalance to the downside. So you got a lot of resistance up there. And where's the next draw on this higher time frame chart? We've already taken out higher time frame buy side. Do we still have that draw? Well, we actually do on this one. It doesn't look like it's going to hold up for much longer, but look right here. See how it hasn't really taken that level yet, or hasn't had a deep sweep of that level, hasn't really violated that level. So we still got that draw on liquidity right there, being that old low, right? So with that being said, if this thing can come up here next week, I would say it's probably going to take this out before it does get any type of significant pullback from the looks of it. But if it does come up here and it returns to these imbalances up here, you would preferably want to go with this one, of course. I mean, you could get it off this one. We'll see if we can get a reaction, but we also got this bearish imbalance up here as well that's serving as a draw, because you got this big bearish imbalance on that big displacement lower on Friday. So what I'd be looking for here on EURUSD is, just like I was doing with that GBP/USD, you could look for it to come up here into this area, into this inverse fair value gap, and then go to your, again, it's kind of up to you, or in this case, you absolutely would want to do that, being that you have this big imbalance up here. Go to your lower time frame chart, and then you can look for your lower time frame reactions off these specific levels, off these specific imbalances. Like, say, for example, what do I mean by that? Well, let's go to so let's say price, let me get my drawing tool real quick. Let's say price ends up pushing up right into next week. We still have this low intact. That's key, because if it comes down and takes out that low, well, then the odds of it respecting this particular area are not as high anymore, because now it's taking out that higher time frame sell side. But right now we still have that draw intact. It still has not taken that level right here. That's where it's drawn to, absolutely, but it hasn't taken that yet. So that's what gives it validity, because we still have that pull, we still have that magnet for price, right? So, but if it was to take it out, you no longer got that magnet for price. So what I would look for here, if it can do so, it might not. We'll just have to see. If it can do so, look for that push up into these inverse fair value gaps up here. We got one right there. Yep, we got one right there. Yep. And then I would look for that lower time frame reaction after we push up and we test those particular levels. Okay. That's how I do this case, because you do got that big bearish imbalance up there. So I wouldn't just go in, for example, and short on the 4-hour time frame, then put your stop all the way up here, because it does have a reason that it could move higher right here. But if it was to come up, right, because we got relative equal lows, if it was to come up into this imbalance, then you could look for here, let me redraw this on here real quick. What you could look for here is, as I teach you in regards to market structure, look for that shift, boom. If it can confirm, then you might get that next move lower like that. That's how I would do this particular scenario, because you can anticipate it's going to serve as resistance. That is indeed an inverse fair value up in the higher time frame chart right there. Okay, and you got buy side liquidity up here, you got an imbalance up here, you got a lot of resistance up here. So if your USD could push up without taking out this level down here, that could set up for a really solid shorting opportunity here a little bit later, if it can do that. And that's what you would look for. But again, guys, if it comes down first, would I trust it as much? If it was to sell off here without doing that and take out this low, I wouldn't. Then my mind goes to, okay, that could just be bait. That could be bait now, because it's going to create a lot of buy side above that high. But now we no longer got this magnet for price, and then the odds of it respecting it are not as high. It could, it's still worth keeping an eye on to see if it comes up and gives you a reaction. But the fact that we have this draw that would be taken, you wouldn't really want to trust it as much. So that's the key thing here, guys. This is the key takeaway. Yeah, that's what an inverse fair value gap is. That's how you identify it. Because you can see right there, it cracked beneath it. Again, look how it closed beneath that imbalance right there. 1, 2, 3. If it was really respecting it, it would have stayed within the range. It would not have, yeah, it's okay if like the candle wicks beneath it. It's okay if it trades beneath it, but you want to see it close within it. Let me say that again. It's okay if it trades beneath it, but you want to see it close within it. You want to see it respect that imbalance. This EURUSD, look at this thing. It had that super strong close beneath that imbalance that did not respect that level. That's not a bullish signature. That's a bearish signature. It shouldn't do that if it really is going to want to respect that price action. Now, same deal right here. We got another imbalance right here as well. See this? It's a smaller one right here. Same deal. Close beneath it. Bearish. And then look down below. Boom. Sell side right here. Swing low right here. That's where it's drawing. So now if you're going to push up into this imbalance up here and then provide that reaction, okay, then you could look for that next leg lower to take out this low. It may do it, it may not. Again, you just have to wait and see. If it doesn't, that's fine. Well, guess what? There's plenty of opportunities, right? So, yep, I think that about covers the video. So if you enjoyed, leave a like, subscribe to the channel. I'll catch you later.